Good morning, everybody. Great to meet you all. Great to see you all. Great to see nieces, nephews, kids, and small people, and cats and dogs in the background. Everybody's welcome. Shame we're meeting under kind of such extreme circumstances, but it's still great to meet you all. We've got an hour, and I'll just run through what I plan to cover. But really, by keeping it to a relatively small group, we wanted to give everybody a chance to ask any questions. So I've got some stuff prepared to talk through, but really, you've got me for an hour. Some things I know the answers to, some things I don't know the answers to. If I don't know the answers, my commitment is to find out and to come back to you. What I would say is there's no such thing as a stupid question. So I think no judgment. I've done a fair amount of research, both on your behalf, on the Dermalogica's behalf, trying to cut through and find out what's fact, what's fiction, and work out what you need to do. It's really, really difficult. And every day we get new information that then further clarifies things that maybe we thought were the case 2 days ago. So I guess what I'm saying is there's no such thing as a stupid question. I'm genuinely here to help however I can. So I'm going to run through a few bits and pieces and then open it up. So what I'm going to do now is just share my screen. So please just confirm that you can see that rather fetching picture of me in Sequoia National Park. Can people see it?
We are seeing the cash flow template right now, Stuart.
Ah, okay. That was not planned.
That's okay.
Second.
We're foreshadowing what we're going to look at. Perfect.
You're the only person that's ever said perfect on seeing that photo.
Well, I meant the presentation was up, but sure.
Okay. For those of you that dialed into the global education events, I had a bit at the end of the first one, and then a slightly longer session in the second one. So apologies if you've heard me say this before, but I think it's quite an apt mindset or an apt quote from Benjamin Franklin, which is by failing to prepare, you're preparing to fail. And I think I've started every session that I've done with the idea that, you know, without a good plan, it's really difficult to navigate the course. Even if the plan tells us stuff that we don't really want to acknowledge, we kind of have to do it. And I think by actually doing the plan, you force yourself to focus in on what the most important things are for you, and then to start moving positively towards fixing them. I can assure you that, you know, if you bury your head in the sand and try to pretend it's not happening, you might get lucky, probably you won't. So I'm of the view, you know, pull off the Band-Aid, do the plan, work out what it's telling you, and then work out what you need to do. And the sooner you get from that sort of fear stage into action mode, I think it will give you a sort of mental, emotional benefit as well, right? Because, you know, you can waste lots of emotional energy worrying. I think when you channel that into actually taking action, no matter how difficult that is, it's a far more positive mindset. What I'm going to run through is to give you my take on some of the federal support that's out there for small businesses. I'll run through as an example the different support you then get at a state level. I'm going to use California as an example. I apologize, I wasn't able to swat up on all states in advance. The good news is I have a number of people in the team, and what we've agreed to do is divvy up the country and try to get more knowledge of different states as we possibly can. So please do ask questions if you've got questions that are not California based. Chances are I'll have to take your question down and either come back to you or read up on it, okay? Then I'm going to talk you through the cash flow template. Maybe some of you saw it on the Global Education Conference, so apologies if you've seen it before. But again, it's probably one of those things, there's no harm going through it a couple of times, okay? We had one question that came through in the Global Education session during the week, and that was someone asked a question about, is a cash flow and a balance sheet the same thing? So I thought, given that in a number of instances as a small business owner, people may ask you for a balance sheet, I thought I would take 2 minutes to just talk through what that really means. Apologies again for the people on the line who this is simple, but honestly, unless you're dealing with this stuff, these aren't obvious answers. And then I'll stop at the end for Q&A. I guess we'll have at least 10 minutes at the end. My style is far more informal. I would far more appreciate questions as we go along. So if something pops in your mind that you want to ask, please just ask it. I'd rather do that than save up everything at the end. I'm just going to pause there very, very briefly and just check if there's anybody. You can message Celeste, you can message the group, you can come off mute and talk, but was there any topic that people were really, really hoping to cover that I haven't got here? I can either take it down and we can follow up, or I can weave it in. Celeste, I think you're on mute.
Lori, did you have a question?
No.
Nope. Okay, good.
I am going to offer free invisible physical defense for the first person to ask a question. If nobody asks, then the prize goes to me, which will be greatly received. If someone does ask, it goes to them. I have no problem giving myself prizes. Okay, so if I go to slideshow mode, can everybody see that? Cool. We will share the links. Hang on a second, I can see. Are you managing the chat, Celeste? So I'm not looking at the messages coming in, so stop me if you need to. So the first thing I'm going to talk through is the Families First bill. Obviously, we've included a few links. There's two really good links. One which is a summary of what it is, and there's another which is an FAQ, which is frequently asked questions. They're both really good links. And I know it's not easy finding that one link that kind of helps you, so we'll circulate these afterwards, but I thought I would include those. So Families First bill was effective 1st of April 2020, which was obviously yesterday. Just checking my watch. It applies to businesses with less than 500 people. So I guess the first important thing to say is it is a law. So this is not an optional program. This is a compulsory program. Yeah. So as an employer, as a small business, you are expected to provide this. Now there is support for you doing so, but you can't opt out of this. Okay. And what it does is it splits basically leave that you need to provide people into 3 categories. Category 1 is all small businesses need to provide up to two weeks, 10 days, 80 hours, depending on which way you cut it, but up to 80 hours paid sick leave at 100% of somebody's regular pay for anybody who is what we might call quarantined. Okay, so that means that a specific order instructs them to be at home, that they've been diagnosed with coronavirus, or they have coronavirus symptoms and they're waiting for a medical diagnosis. Under those 3 categories, we would need to provide for that person up to 80 hours sick leave at 100% of their regular pay. And it is not just people on your books. It could be day laborers you have in, it could be temps, it could be freelance. Okay, so it includes everybody. Then the second group is people who themselves are not sick, but need to take sick leave, either to care for a loved one who's being diagnosed, a child, you know, a kind of, they have on there a bona fide reason that that person cannot work, that you need to provide them up to 66, it's between 60 and 70% of their regular pay, again for 80 hours. Okay. And then the final category is that for people who are unable to work, and in many cases this is absolutely relevant, where schools are closed for extended periods. And I guess when you look in the news and you hear all sorts of different theories on when the schools will reopen, but that as an example, there's an expectation that small businesses will provide up to 10 weeks of extended leave for people who cannot work because they need to look after children or family members. Okay. There is an exception in the wording which says that for businesses with fewer than 50 people, where that person taking 10 weeks off would prevent the business from performing its, you know, if you've got a salon and you've only got one therapist, and therefore by losing that one therapist, 50% of your business revenue is going to disappear. There is an exemption for companies below 50 people where this does not apply.
So, Stuart, we have a question about what about businesses that were not essential and had to close? Are they responsible for any of this?
I mean, if you've got employees, so if you've retained the employees on your books, the answer is yes. So if you are continuing to have people under your employment, then you are obliged to offer this. So I guess you have a decision point as a business owner is, do I keep my employees on my books or do I not? And there's actually something I'm going to come to, which is Sba Loans, which I think is actually a slightly better scheme for the example that the question just asked. This specifically covers people that cannot work either because they themselves are sick or they need to care for someone who is sick or can't go to school. Okay, but if you are under 500 people and you have employees still on your books, this is a law that applies to you, regardless of whether your doors are open or not. Okay. I would think the majority of salons are fewer than 50 people, and therefore likely the extended 10 weeks probably doesn't apply. But actually the guidance I've seen, it's not 100% clear. I think you would have to communicate some sort of exemption. Okay. There is a minimum in there. So in terms of the compensation, it is the higher of minimum wage or that person's regular pay. So if for some reason the person is being paid less than minimum wage, then there's an expectation that when you apply the percentages, you would apply it to minimum wage, not regular pay. For people who are at or above minimum wage, then it would be their regular pay. The support that you get is a 1-for-1 tax credit for all wages. Yeah. So that includes healthcare. So you are able to say, look, this is what I've paid out in wages and healthcare. Therefore, this is the tax credit. The tax credit would be applied to all payroll taxes that you as an employer would have to remit. If you are claiming more than you are due back, the IRS has promised to process refunds ASAP. What that means, I worry, if I'm speaking candidly, in a number of these schemes, when I hear some stories about, for example, people applying for unemployment insurance, and you hear some horror stories about how easy it is to actually get through and actually register. So I think with the sheer volume that's going through the system and the fact that in many cases some of these operations are working from home, I don't think that ASAP is probably going to mean within 24 hours. So you may well need to persevere.
Hey, Stuart, we
Yeah.
have a question. I know you're going to cover unemployment in a little bit,
Yeah.
but there's a couple questions with someone has heard that it's actually better to lay your employees off, then they can actually collect unemployment, and then obviously you as an owner can apply. What are your thoughts with that? Because I know we're going to cover the SBA loans.
If it's okay, let me come back to that.
You got it.
This bill is not a vehicle, I would say, to keep your business going, really. If your doors are closed, you don't have revenue, and you've got people that can work, in the end, if you're not paying them, they are better off collecting unemployment insurance than they are collecting no money from you.
Perfect.
What I just wanted to be clear is, if you are in a situation where you've kept people on and they need sick leave, number one is you're obliged to do it by law, and secondly, there is support for you doing so. I just want everybody to be clear, because it is an obligation, but also a support mechanism. Okay.
Perfect. And then there was a question about our gig workers and kind of that crew of able to take unemployment right away. As far as I've heard, yes.
Yes, as far as I've heard, yes as well. And they used to have a sort of 7-day period where you need to be unemployed for 7 days before you can start to claim. That's been removed. But like I say, I've heard a few horror stories about how easy it is to actually register as unemployed. You may need to do it at unsociable hours. You may need to literally just sit on the line. I've heard people on that for days.
Perfect.
So small business administration, small business association loans. I think this is potentially the most interesting one for you as a small business owner. Okay. Effectively, the SBA offers, and this is a countrywide thing, a federal thing, not a state thing. They effectively offer 2 types of loans. One's called PPP, which is Paycheck Protection Program, which has been introduced as a direct response to the coronavirus. And then there's a second, which is an economic injury disaster loan. You are eligible for both. They are a little different. The EIDL loans they're not specifically for coronavirus. They existed before, they will exist after. They're designed to cover different types of things. If you want to purchase equipment as a business, if you want to buy stock, the process for applying is a lot longer. And whilst there is the option of some loan forgiveness, it's not structured in the same as a PPP. So for now, I'm going to focus on PPP. I honestly believe it is the most relevant to you as small business owners. I actually think it's quite an interesting program. So it opens on Friday. So it opens on the 4th. If I got that date right, sorry, the 3rd. So it opens on the 3rd of April. And it is effective from the 15th of February through to the 30th of June. So it gives you a decent period. Whilst it's a federal scheme, it is being delivered through effectively banks. So banks and certain other lenders will be nominated as SBA lenders. And those are the organizations that you will go through. You will not be going through directly through the SBA or directly, you won't be going through the federal government in terms of this. You'll be going to a lending facility. So the first thing we need to do is understand, where are the local SBA lenders in my area? And there's a list that's available, and that list should be growing. So again, I heard that a number of banks and institutions are waiting to get that status. It is technically a limited fund. So at some point they might run out. I'm told that they will give preference to small businesses over sort of medium to large businesses. So I think, small skincare businesses should be, particularly with retail and service, I think should be in a good position to get this fund. The money is loaned over 2 years at 0.5% interest. On the website, it talks about a cap of 4%. We spoke to a specialist yesterday who believes they're 2-year loans at 0.5% interest. You don't need to put any collateral down, and there's no personal guarantee. Okay? So literally you apply, there is no obligation then left on you as an individual should that loan go bad. Okay? All repayments are deferred for the first 6 months. So you wouldn't need to pay back anything in the first 6 months. I think there's in the small print, interest is not. So it will accrue at 0.5% interest, which is relative, which will be kind of 0.25. So it's relatively small. The amount that you can borrow is up to 250% of your average monthly payroll. There's a caveat in there that anyone who earns in total more than $100,000, there's a cap at $100,000. So if you had 5 people at 50,000, that would be 250. Then you'd have someone at 150. It wouldn't be 400. You could have to limit it at 100. So therefore, it'd be 250 plus 100. Okay. So it's 250% of your average monthly payroll cost for everybody 100,000 or lower. It includes you. So if you are the owner operator of the business, if you're paying yourself a salary, it includes you. It includes commissions as well as base pay, and it includes health insurance. It's a full payroll cost. It's not just base pay, it's fully loaded, including sick leave and all of that sort of stuff. Okay? So you can borrow up to 250%. Now, here's the bit that I think is really interesting. They will forgive you up to 100% of that loan. So there's a scenario under which you take this loan, let's say, in the next week. By the 30th of June, you can have had 100% of that loan written off. So in the end, you'll have to pay none of it back and pay no interest. The interest only gets charged on the amount that's not forgiven. Okay? And what they said as rules is that you can nominate an 8-week period. Okay? So my suggestion is don't try and do it backwards. My advice would be to do it forwards. It is that you would take an 8-week period, probably from the moment that you get the loan. For that period of 8 weeks, basically, you can forgive all of your payroll costs for that period. And provided that payroll costs are at least 75% of what you're claiming to have forgiven, the remaining 25% you can claim against rent, mortgage, utilities. So you can effectively reclaim, and if you think with the 250%, you've created that extra 50% on top of your payroll. If you maintain your workforce, not only do you cover all the payroll costs at 100% plus health insurance plus commission, the 50% on top then becomes a contribution to the running costs of your business.
Stuart,
yeah.
We have a question about how do we handle with contracted employees who do not work as a set schedule? So I will double check on that. My understanding is they use historical averages. So if it's a contract that you've only recruited in the last couple of weeks, I think that's going to be difficult. If it is someone that you've had on a contract basis for a period of time, you would then arrive at some form of an average. Let's say that they're doing 25 hours a week. In that 25 hours, they earn X, they get X commission. So it would be done on a rule of averages. Some of that, it only opens tomorrow. So some of that's kind of smaller detail about exactly how it's viewed is not 100% clear. Mm-hmm. But the specialist we spoke to yesterday certainly indicated that it would be based on sort of averages. So if you've on average got 10 people in your business or 5 people in your business, that's what you would use to calculate your average monthly payroll, which would include those people. Perfect. And then one other question from Joyce. What about a single operator who has no payroll? So would it still be beneficial for them to take a loan out like this?
Well, assuming they pay themselves something, they can claim what they give themselves against this. Mm-hmm. And then use some of the balance if they've also got rent, if they've also got utilities. So, I mean, again, you'd have to look at it, but I would think so, yes.
Perfect. And then Alice has a follow-up question. Is that how to pay them with the loan also, like historical averages? Alice, I'm gonna unmute you so you can kind of have a more detailed conversation. I'm trying to find you. Hold on one second for me. All right, Alice, you are unmuted. If you want to ask Stuart a little bit more in detail of what you're asking.
Hey, Stuart. So I have I have 5 staff that work with me as contractors. So going forward, as I use this loan for payroll, I guess there's 2 options. One being maybe that payroll should go towards myself, and it might be better for them to claim unemployment, because I'm not sure that they can do both. How can they claim unemployment if I'm paying them payroll? But if they choose to accept payroll, how do I determine what to pay them?
Well, remember that 75% of what you can forgive has to be payroll. And it's based on historical averages. If you were to give yourself a 400% pay increase and not pay others, in the end, I don't think anyone's going to find you out in the beginning, but then there's a chance when you come for the forgiveness that they're going to go through your books and say, hang on a second, over the average here, you've earned 50,000. Why are you all of a sudden paying yourself 100,000?
So I think maybe I should probably give the staff member the option first.
Yes.
Okay, and then
I would think and again, it depends whether you've got somebody who is, let's say, working 25% of the time for you, 75% of the time for someone else, and they've been laid off. But if someone is working disproportionately for you, given that they, in this scheme, would get 100% plus commission plus healthcare, I would think that's better than any unemployment insurance that they're going to get for that period.
Well, since they're independent, I don't do healthcare. They're independent. So. Okay,
but even then, if they get commission,
right?
And remember, unemployment insurance only is 60 to 70%. It's not 100%. So even if you only paid them their base pay, they're going to be getting 30 to 40% more through this scheme than they would do unemployed.
Now, while the loan is forgiven for the business, hopefully, I would have to put their income in a 1099 at the end of the year, correct?
Yeah.
Okay. Do we know if the unemployment is taxable?
I believe it is.
Okay.
But Amber's make a note of that question. I believe it is. Make a note of that, and I'll double check.
Thank you.
Yes, as far as I know, that is still taxable. The only thing that would be not taxable is if they went out on a disability.
Okay. Thank you.
The other thing that's interesting about this is, and I think one of the reasons why they're starting it from Friday, is if you as a small business have decided my doors are closed, I'm letting everybody go, this gives you the option to rehire them. Yeah, so you could rehire your staff. You could demonstrate on historical average that to get the loan, you can rehire, and then you can run this forward for an 8-week period.
That's interesting. Okay.
Now, I think what I would say is it's only 8 weeks. So, what happens at the end of 8 weeks? Again, the interesting thing about this is that it doesn't stop you if it goes on for a lot longer than 8 weeks. Either the SBA comes out and says, I'm extending the program, gives you more money, gives you a longer period, or at the end of that 8 weeks, if your doors are still closed, it then doesn't stop you laying people off and then having them collect unemployment insurance. Because you've gone through this scheme doesn't mean that people can't claim unemployment insurance at a later point.
Okay.
So there's 2 processes in here. One is the application up front. We are actually working with a specialist. We had a meeting with him yesterday just because it's such a difficult area. So what we'll try and do is share what we know about what you would need. We've got a bit of information on what we think you might need, and try to help you through it. But ultimately, there's going to be an application up front, and that could be painful, finding the right person and doing that. And then there'll be a process at the end where effectively you apply for forgiveness. In my mind, this you are the types of businesses that this scheme was set up to support. Therefore, if it doesn't work for your businesses, provided you comply with the the criteria that I've laid out, provided you've complied with that criteria, if this scheme is set up in the way that it's designed, it is designed to help your businesses. And I think it's a really interesting idea, particularly if it does only last for 2 months. And I think if we all think it's going to last a lot longer than that, either there's then other options available, or I think that the government will come back and look at how they can continue to support small businesses. Because paying out all of this money and then pulling it all away in 8 weeks, I don't know how that's going to work.
Stuart, I have a question. This is Joyce.
Sure. Hi, Joyce.
Hi. So some of my friends, I'm in Los Angeles here. We are a single operator, but we're a corporation. So I already applied for the original EIDL loan, but if we're a corporation, we have no employees and we're basically paying ourselves, but not a set salary, not like a weekly salary, but it's part of our income taxes. Can corporations as well apply for this PPP loan?
If you've applied for an EIDL, it doesn't preclude you from applying for PPP.
Okay, so it doesn't matter, corporation, we can still do this?
I believe so, yes. Now, we did have a question, which is, I think there's a difference if you're paying yourself, let's say, the form of a dividend versus I'm paying myself a salary. I think it's very straightforward if you're paying yourself a salary. Now, that would be, and again, it doesn't matter too much, I think, if it's inconsistent, because they would look at average over a period of time. So I think that's completely manageable. I think then the question is if you're paying yourself through dividends, that's something I would just need to check the extent to which there's cover for that.
Yeah, because obviously single operator, everyone I know pays himself through dividend. In other words, they take out what they need every week. There is no set salary per se.
Yeah.
So, okay, so I'm just going to go ahead and apply and see what happens.
For sure. So for sure, definitely you can get a loan. It's just, let me come back and just confirm the extent to which, let's say, the dividend income can also be determined as in the part of overall payroll costs.
Okay, thank you.
I honestly don't know the answer 100%. I'm kind of slightly optimistic, but I would definitely want to check before I gave you an answer.
Okay, thank you, Stuart.
Stuart,
Yeah.
we have somebody asking now, would a 2-month loan payment for a machine fall under the forgiveness program?
No.
Perfect.
No. You can, the interest that you might be paying on something like that potentially could go into some of the 25% of operating costs that you have as a business. But actually the EIDL loans are more designed for that type of support.
Perfect. And then Linda, you have a good question. I'm going to unmute you so that you can kind of give it more detail with Stuart.
Hi, thanks. Thank you, Stuart. I listened to a 2.5-hour thing with a CPA that a fellow expert friend that's in New Hampshire had actually given me the link to. In there, they were saying that if you apply for the EIDL loan, you automatically will get within 3 days $10,000. Whether you qualify for the loan or not, you get to keep that $10,000 without having, and it's forgiven, and you don't have to pay anything. It doesn't even count towards your income, and you don't have to report it apparently on your tax return. Then he said that you can also apply for the PPL loan, or you can refinance the EIDL loan into a PPL loan. So you'll have the benefits of that, and you still will have that $10,000 like forgotten about, and you'll have that initially. Have you heard anything about this or not? Also, there was a lot of question about if someone does do which would be better, the PPL loan or having the employees and the business owner can also apply for unemployment. They not only will get their state unemployment, but also if they are receiving unemployment at all in any amount, the federal government will be paying additional up to $600 a week in unemployment, thus giving no incentive for the employees to come back to work. And that if they do the PPL route, that as long as they hire the employees back by June, I think it was June 30th, that everything will be, I guess, copacetic, for lack of a better word right now. Have you heard anything about any of that?
So I have heard a few things about some of those things. I'm going to try and pick apart the question because it was a really good question, but it was probably nested in there 2 or 3 points.
Yeah.
So the first one, which I think is about whether someone is better off taking unemployment insurance or whether you're better off on this PPP scheme. The unemployment insurance, you're right. So there's a federal top up of $600 per week. And that then applies on top of whatever the relevant state unemployment insurance is. So you would have to do the calculation about whether the employee is better off with the additional $600 on top of what the state was giving, and it can be wildly different between states. The PPP forgiveness, you have 75% of what's forgiven has to be payroll, and it has to be on paid payroll. So if you take the loan and then make people unemployed and therefore you don't pay them, then you won't get forgiven on the loan. Now, it's still a loan. It's still money that you can use to manage through that situation. So it could still be extremely useful to you, but you will have to pay it back. If you use it to pay people, then you will not need to pay it back. So does that make sense?
It does. But there's also, I was told from my understanding, there is no prepayment penalty for the EIDL loan, so that you can either just pay it all back immediately and still keep that initial $10,000, or you can refi some of it into the PPL, then pay the rest back, or you can decide to hold it as a little cushion for 6 months or so until you feel comfortable and can get back on your feet.
For sure.
And so,
can you see this?
Is that correct?
Can you see this table on the screen?
Yeah, I think so. The key differences?
Yeah, so we had this shared with us yesterday, and it is a simple table which compares a PPP loan and an EIDL. So the loan amount can be much higher on an EIDL, whereas for PPP it's limited to effectively 250% of your average monthly payroll. I think, your businesses would be eligible in both. The application process for PPP is designed to be fast and is designed to respond immediately. In terms of the EIDL, it's a far longer process and a far more classic type process. Yeah, so it will consider things like your credit score. I don't know whether they do credit checks, and that, your course for under 25,000, I don't think you need collateral. For loans over that, you do. whereas PPP is designed that effectively there's no fees. If you qualify for it, you're likely to get it as a small business, and you're likely to get it quickly. Again, under 25,000, which is what you were talking about, you don't require guarantee or collateral for either. The interest, I think in the end, PPP is going to be 0.5%, so it is going to be lower interest. For forgiveness, I guess PPP is very specific. What we've been told about the 10,000 forgiveness under EIDL is yes, they can, but it's not 100% guaranteed. You would need to apply, and I couldn't sit here and say that everybody that applies for a 25,000 loan is going to have 10,000 of it forgiven, and then a few months later can pay back the remaining 15,000. Or I'm not sure that it's that formulaic, whereas the PPP does seem to be quite formulaic.
Sorry, no, you can finish.
You can defer 6 months PPP, you can defer 6 months EIDL. There are slightly different uses for them. And I guess the good thing about EIDL is that it's available long term, whereas PPP starts on Friday, finishes on the 30th of June, and will likely run out of money. So if you're waiting till the 30th of June, even if you're eligible, you may not get it. I mean, it really, I guess you have to look through this from a few lenses. Lens number one is, under which scenario are your employees better off? Are they better off getting the extra $600 of unemployment insurance plus what they get from the state and therefore being unemployed? Yes or no? For PPP, PPP, what it does, it allows you to take a loan which can be up to 100% forgiven, potentially helping your employees, definitely helping you, and definitely helping you in the short term with business costs. If you choose not to use it for that, then it is still a very cheap way to get a loan. You could, in theory, not use any of the 8 weeks if you didn't want to. You could just hold on to the money. A 2-year loan at 0.5% interest, you're unlikely to find anywhere else. So if you feel that you're concerned that you need the cash, then you have the option to hold on to it. And you are absolutely right. If you have an EIDL, it doesn't stop you from also taking PPP. Also, if you take PPP, it doesn't stop you from taking an EIDL. And if your point about conversion from one to the other, I'm not 100% sure there's a conversion from PPP. I think it's separate. I would need to check on if I already have an existing EIDL, whether it's transferred or whether I just run with two. I think I just run with two, but I will double check. Ambus, if you wouldn't mind just noting down that question, that's another point we can come back to.
Thank you.
Stuart,
Yes.
so we have one of our skin therapists who's currently actually under construction at their new location. I'm assuming they can use their EIDL loan for that, correct?
Yep.
Perfect. Now with the PPP, can you use that? It's just not forgiven.
You can use it. Yes, absolutely, you can use it. It's only, you have to apply for forgiveness. First of all, if you don't apply for any forgiveness, you're going to get no forgiveness. Unfortunately, that's the way of the world. But it's up to you then to the extent to which you apply for forgiveness. Remember, 75% has to be payroll. I guess if it's a brand new business that has no history of payroll, then I don't know that you'll even get the loan in the first place, given that it's based on a historical payroll. If it's a business that's, I've closed the doors and I'm doing a refit for when it then reopens, then you've got the history. It's then up to you how you use that. I guess if you are under construction, you probably don't have employees. You could bring them back and pay them. You could certainly pay yourself. I think that's the interesting part of this, is even if you bring back none of the employees, you can still pay yourself a salary from that and have it forgiven. And then the option, it's then up to you what you do with the balance.
So Stuart, if you pay yourself, you have to be technically on your payroll to pay yourself, right?
There was a question earlier about that,
Mm-hmm.
and I believe, yes, so it talks about payroll costs.
Mm-hmm.
We did speak about people who pay themselves in dividends, and I think that was the question that came up earlier. I would like to double check whether the definition of payroll includes dividends or profit sharing for owners of businesses. That's a point we'll come back on. And what happens is it's also, these things are being refined as they go. So we, you know, and often as people ask questions, so then clarifications come out. I'm positive that if you pay yourself a salary, that's included. I just want to double check on if I pay myself through dividends. We did ask this question yesterday to the specialist that we spoke to. And I mean, he pointed out that these schemes are open to people who are self-employed. If you're so, you know, again, so I would tend to be optimistic, but given I know the importance of this stuff, I don't want to lean out and tell people definitely yes before I've checked. Any other questions? I'm also happy to share this key differences between PPP and EIDLs, if that's helpful.
Yeah, it looks like it is. I think what we'll do, Stuart, too, is after we're done with the 3 different financial planning sessions that we're doing, we'll probably do a Q&A and answer all these questions, and then we'll send it out to everybody that participated, plus the key differences between the PPP and the EIDL, and some small business stock information that we have. So attendees, don't worry, we will send this information out to you as well.
I'm also really impressed with the level of the questions. I wasn't sure what we were going to get, but we've obviously got some really, really sharp people on the line. So thank you for the questions. We will do our best to answer them for you.
Perfect. Linda's saying that owners must be on a payroll by March 8th to qualify for the PPL. Okay. So
Well, it's also based on historical.
exactly.
So
Perfect.
yes.
And then Joy is asking, what about DUA? I'm self-employed. Do I apply for unemployment?
Someone, I apologize, you've guessed that I'm not American. So sometimes the acronyms catch me out.
All right. I don't know what a DUA is. Joy, do you want me to unmute you and we can have you actually ask the question? That's not a problem. Give me one moment. Let me find you.
I know a DUI, but I don't
know a DUI, and I almost. Okay. Joy, I have unmuted you if you wanted to ask the question in its entirety.
Sure. DUA is Disaster Unemployment Assistance.
Oh.
And I believe it's for self-employed. I'm self-employed. I don't have any employees.
Mm-hmm.
When I try to apply for unemployment insurance, you know, it asks for who your employer is. It asks what type of work you do, and I cannot find anything about skincare. The closest I can get is hairdresser. But I have heard of disaster unemployment insurance or assistance being available starting, I think, tomorrow.
I mean, I honestly haven't heard that one. Ambrose, if you just make a note of that, we will today look into it. I believe a lot of these schemes are being opened up to include self-employed. I think originally it was talked about staffed employees, but it's been expanded to include self-employed, temporary day laborers. So I will look into that and come back to you, Joy.
Do you recommend that I apply for unemployment insurance? And if so, can I put myself as the employer?
Yes, I believe you can.
And then when I can't, you know, as far as the type of work, I can't find any, I mean, I can do personal services, but the closest I can get after that is hairdresser. Can I put that and then keep on with the application?
Let me check. Let me check.
Okay.
Thank you.
Celeste, we're making a note of all these questions, right? We will, as soon as they finish the call, we'll go through and make sure we get answers on those today.
Do you get back to us?
Yeah, for sure.
How though? Through email or?
Yeah, we'll get back to you via email.
Okay, thank you.
Oh, you're welcome. Alana was asking to figure out an average. Do we use the 2019 payroll and then times it by 2.5?
I do, yeah, I can't remember the exact number of months. Apparently they have, I would think it's 2019 average divided by 12. That's the example that we used. I think if your business is not even, let's say, for example, your business was growing or you expanded, I think you might have a case to say, look, I'm going to divide it by 6 months because, you know, I added 2 people to my team in the middle of the year and therefore my payroll cost, the cost that I'm actually running at is higher. But if you've got a relatively stable business, 12 months of 2019 divided by 12 would be the proxy.
Perfect. Thank you so much, Stuart. I think you can move on, I think, to unemployment, I believe is next.
Yeah, so again, I'm using California as an example. So the 2 schemes that we talked about are obviously federal schemes. On top of that, of course, there's then California specific schemes. So the Employment Development Department, it's pretty good, I have to say, in terms of the information that they share. So you have there's a few different schemes in there that I think are interesting. So there's disability. So if literally you, for illness reasons, you cannot work, then again, I think it's up, I can't remember the term, but ultimately, again, you can get 60 to 70% of your wage. PFL, which I think is obviously something that you've raised. So in terms of taking leave, that in California is 60 to 70% of salary up to 6 weeks to a maximum of $1,300. And then separately, unemployment insurance, that's when it's no, you know, the difference, what's the difference between PFL and UI? UI is where it's not the choice or the fault of the employee, if that makes sense. So I have been laid off. I have had my hours reduced to 0 rather than I need to take leave to look after a family member or something like that. Yeah. So first one is genuine, you know, I'm sick, I have an injury or something, I can't work. Second is I need to take leave. Third is I'm unemployed. And you can, like I say, you can use these in conjunction with an SBA loan. If you want to take the 8 weeks forgiveness there, you can then flip to this scheme. Afterwards, there's also a work sharing scheme, which, depending on how big your business is, so a minimum of 10% or 2 employees. So really you need to be probably a business with 20 people. But in a business that's 20 people or more, if 2 or more people are affected up to sort of half of their hours, then you are able to apply to the state and they will put up the other 50%. So you can end up running a workforce at say 50% or 40% capacity and then having the state top that up. Now the state tops up the difference probably at the 60 to 70% because it's unemployment insurance, and you would need to be a business with a certain number of people and still running at half. So again, the criteria is a bit tighter, but there is a scheme out there if you are of a reasonable size, and it's not that it's 0, you're just running at a much lower hours. Okay. The other thing is if you apply, the state will give you a 60-day extension on paying payroll taxes, which is something I would do anyway, particularly at this time. There's then also private organizations out there. Some of this stuff, you know, my grandfather used to say to me, if it's too good to be true, it probably isn't. And that seems to be a theme that runs through my existence, but you'll see lots of stuff out there. Some stuff is good. So Google are giving support, but the support they're giving is through ad credits. So you can apply to Google. And again, it could be really useful in helping get your business back up and running as and when this is coming out, having advertising support. Facebook's doing a combination of cash grants, but also, again, Facebook advertising credits. So again, there's private stuff out there. There was an interesting article in Women's Wear Daily where it talked about the sort of the 6 schemes out there to support small businesses. That was also pretty useful. So on top of the 2 federal schemes that I mentioned, each state has its own support. That's the support available in California, and there's also private organizations out there as well. I'm conscious that we had a very rich discussion on support. We haven't touched the cash flow template at all, but I am conscious that we've got literally 2 minutes. So I just wanted to pause and take questions. And I guess I'll offer, in terms of the cash flow template, I think it's pretty self-explanatory. If you watch the session which we videoed on Wednesday, if you look at that, I actually talk you through the template, and that will take about 15 minutes. So that's one option. If, having done that, you still feel that it would be useful to have a session where we actually guide you through how to do it, really happy to do that. We're here to help. Maybe reply to Celeste or through the US education team, and we can set something up. But I'll just stop now and just check if there's any last questions.
We have one left that I see from Alice. When determining healthcare for the PPP, should I use historical or for the covered period of February 15th through June 30th?
So I think the loan amount uses historical data. When it comes to actually paying out, I guess you will pay out based on what you actually need to pay. And I think that too, the reason they give you 250% is to allow for sort of some ups and downs. So if it ends up being slightly more, ends up being slightly less, you're not hamstrung by the exact ratio, but effectively you have 250% of your average monthly payroll. And when it comes to forgiveness, 75% of the amount you get forgiven needs to be in total payroll. Of course, they'll check that you haven't halved healthcare and doubled commission or something like that, but I think there's some flexibility in there.
Perfect. And then one question, this is a good one. What's the main advantage between the PPP loan versus unemployment as a sole proprietor where you don't necessarily have any employees?
Well, I mean, there's a question, I will come back to the question of, if I'm not paying myself through salary, I'm paying myself in a different way, how would it work? Mm-hmm. But number one is, anything you are paying yourself, you get for free through PPP. And on top of that, it covers your rent and can also cover utilities and your mortgage and things like that. Unemployment insurance is effectively going to pay you 60 to 70%, not 100, and is not going to allow you to offset other types of costs as well. Unemployment insurance, you're going to get a straight 60, 70%, and it's only of your payroll. If you manage PPP, there's a chance you can get 100% of your payroll and a contribution to your other business costs. That's why I think it's interesting. And then once you've used that, you can then flip to unemployment insurance if it's continuing. But I do want to come back on the point around depending on how you pay yourself within that enterprise.
Perfect. All right. So I think what we'll do now is we'll close the session out. Everybody, I'm going to email you some really great useful links, some documents that you guys can look through. And then the biggest thing will be is that what we'll do is once you have my email address, feel free to ask me any questions and I will forward those on to Stuart and the finance team. And we also
we're personal people as well. So I also don't, when we've got answers to this, I don't mind emailing people directly.
Oh, perfect.
So, you know, and then if people have got questions, we don't have to have everything going through you, Celeste. You know, like I genuinely want to help. So I'm happy to, it would be good to get feedback. This is the first session that we've run. Appreciate that I haven't been able to answer all the questions. We didn't go through the cash flow template, so apologies if it wasn't perfect, but it would be really good to hear, I guess, at least one thing that was useful and maybe one thing that was missing. because it will help us for future sessions. Maybe wait until you've got the feedback from the questions so you can judge us on everything you've asked, but it would be really useful.
Awesome. So yeah, be on the lookout from me for a email from me giving you all the information that we've gone over. A lot of stuff we do is recorded, and we'll be posting those as well. And then, like Stuart said, he loves good questions. So we'll give you his email address as well in my email that I send out. So thank you so much, Stuart, again, and finance team for really supporting our skin therapists. I know they really appreciate it. And thank everybody for taking an hour out of your time. I know you guys are taking lots of classes right now, and we just really appreciate all that you guys are doing, and we hope to make sure you guys are supported.
Celeste, if we stay on the phone very briefly just for 2-minute wrap up?
Yes, sir. All right, everybody. Thanks so
Thank
much.
you.
Have a great one.
Good luck.
Bye.
Bye, guys.
Bye.
Bye. Bye, Janice.
Bye, Tracy.
Bye, Joyce.
Bye, everyone. Thank you, Stuart.
Bye, Tracy. Thanks so much for joining. All right, so we've got a couple more in. A couple more are starting to fade out. Yay. Let me. One more moment. Okay, so. Okay, sorry. Okay, it's just us. Sorry, I had to kick them out. They wouldn't leave.
It'd be good to just get some quick feedback on how you guys think that went.
They're really smart, but that's because a lot of people have been watching the news.
I mean, I'm impressed, right? It means that they're taking the whole situation seriously, and it's great that they've got information.
I think
I mean,
so.
Yeah, they own their own businesses. So it's like,
Yeah, exactly. So
I think what's interesting is the ones that didn't speak will have got just as much from hearing the ones that did speak and did ask questions as they will have done listening to us.
Mm-hmm.
So sometimes it's useful hearing the questions and the discussion as well as just Q&A. I think there's definitely some stuff that I want to come back on. I didn't want to give a definite answer on some of that stuff, but it's really useful to hear the questions.
I think that because you went over the cash flow yesterday, I think I'll just point everybody to watch that video, because I think that the stuff that you went over is so much more important to the now of what they're trying to figure out to do to just survive.
Yeah.
I think it'd be also good to run through like example. It seemed like they had a lot of questions regarding like how the loan would be calculated, like based on like average. So maybe I would just give like a simple like calculation, just talk them through the math really quickly to be like, okay, if this is your 2019 average for like health insurance, payroll, this is what you could apply for, which is the multiplied by the 2.5.
Yeah, I think it's a good idea.
Mm-hmm.
And I think there was more of them have got EIDLs than I was probably expecting. And
Yeah,
more of them are probably paying themselves via dividends than I was probably expecting.
Yeah, I was surprised by that.
I mean, the first loan is limited, so I think it's a small program that I heard, and is probably utilize this loan very quickly. So end of the day, it's the second option, the PPV is remaining. So
right. And I think that's what they're trying to push people into, from what I'm noticing when they're talking about it, is that that's the big stimulus one that they supported the most, was that loan.
Ambrose, can you remind me, do we know the answer to the dividend point?
No, I created a list and I start to research or just reach out the guy yesterday and just give these specific questions. Because I think there's a grant, the dividend, the refinancing between the two loans.
Yeah.
This is